Nifty is down about 41, so back in and around the day's low, 7,265. I think 7,250 or thereabout was the day's low. So we're back in and out there. Mayuresh Joshi is now joining us. Mayuresh, good afternoon. What do you make of the recent sell-off that we have seen? Things continue to look quite bad.
Afternoon, Pankaj. Clearly, I think on the global scale, nobody's really sure on what data points the Chinese markets will keep on throwing, what really happens with crude. So the uncertainties related to these two factors are largely unknown to the markets. Domestically, I think the corporate earnings is something that a lot of analysts have hope on. But again, clearly over the next 2 quarters, a lot of analysts expect the earnings to be muted. Having said that, probably the capex cycle expected to take at least 2 to 3 quarters to revive. So clearly, I think the markets are in a transfix at this point of time on what can be the triggers for the market going forward. And we are more or less ruled by the global volatility. And if crude behaves the way it is, I think you're probably talking even of the emerging currencies probably depreciating even more, which also puts an added stress to how your merchandise exports might pan out. So clearly, I think the softness in the markets might continue, might have technical bounce backs, but clearly, I think the softness might continue for global factors.
Right. In the near term, it will be all about flows and not about fundamentals or valuations so much.
So clearly, I think it's all going to be about how the flows happen. Secondly, I think what probably happens in the budget, what happens with reforms over the next few months. So these are the few pertinent points that the markets will be looking out for. Clearly, I think if there is any amount of disturbance happening on the global front when it comes to either currencies or how the trade data is panning out and how crude behaves, you're probably going to see riskier assets, including equities, remaining soft. So clearly, I think the volatility continues. I think valuations probably might be a little bit more supportive if the markets corrects further. But clearly, I think the earnings have to revive for the re-rating of the markets to take place, and again valuations to be supportive, and those are not happening at this point of time, which is also a cause of concerns for the markets from a near-term perspective.
Right. How would you look at some of the results that have come so far? Anything that you like? Anything that you think is worth looking at?
So clearly, I think out of the large caps, I think Infosys, in my opinion, has given a decent set of numbers. The delivery promise in terms of management commentary over the next few quarters looks very promising indeed. So clearly, I think Infosys is looking reasonable in terms of earnings expectations and valuations. Ultratech posted a decent set of numbers in my opinion, and as new capacities keep on coming through, the merger with JP's MP plants, I think the capacity thereof will go up to 71.2 MTPA. So clearly, I think you've got a nationwide presence, expectations of volume recovery, realizations expected to recover the next few quarters. So that probably also looks good in terms of how the earnings have panned out. Z, in our opinion, again, has delivered a decent set of numbers. So if one really assumes that over the next few quarters, other things remaining constant, including the content cost aspect for a lot of these broadcasters, you're probably looking at a 20-22% kind of ad revenue growth. You're probably looking at 10-11% in terms of subscription growth. So clearly, I think you're looking at decent earnings momentum to come through. Again, disclaimer, I think we might be holding these stocks in our portfolio schemes.
Right. Did you mention Reliance Industries? Did you like the numbers and valuations over there?
Oh, again, I think I missed out Reliance, Pankaj. So clearly, I think Reliance also has given a reasonable performance. And clearly, I think if you look at the core businesses of refining and petchem, our own take is with new capacity commissioning coming through over the next few quarters, you're probably going to see some amount of stability and improvement in margins taking place. The shale business, the retail business, the telecom business, I think no numbers probably envisaged at this point of time. And clearly, I think the non-core capex, specifically on the telecom part of $1 trillion rupees, I think that had compressed ROEs. So I think they're almost at the end of their capex cycle, both in terms of their core capex as well as the telecom capex. And as I said, I think the core businesses, once they start delivering with capacities coming through, whether that petcoke gasification, the off-gas cracker, you're talking about the PTA plant, they're all going to be value accretive going forward. So clearly, I think Reliance is something that we remain optimistic upon as well from the large cap, and they did post a decent set of numbers as well.
Right. As far as Tata Motors is concerned or Maruti is concerned, why do you think auto names are seeing some serious selling today?
So clearly, I think Maruti is more a play on how the Japanese yen is behaving against the dollar. So clearly, I think you've seen a huge amount of an offsetting effect take place in the last few weeks. So that is probably going to take a hit on how the margins for Maruti will pan out. For Tata Motors, it's more to do with how China is panning out. And clearly, again, time and again, I have mentioned that China is now become a very small component. Even if you look at the expectations of volume growth from China, it is in the higher single digits. So clearly ex-China, North American markets have grown exceedingly well for JLR. You're probably going to see new platforms being introduced. The new versions are extremely well received. Europe is doing well. The MHCV segment, though it accounts only a minuscule part of overall consolidated numbers, is expected to revive. It is showing signs of revival. So clearly, I think if the stock corrects further and it's back to those levels of around 310, 320, if it corrects further, I think it becomes a good entry point for long-term investors. Maruti, again, I think the margins might get a little bit compressed, but again, the management is very, very clear that the kind of imports that they probably do, they're getting that percentage down, they're localizing their internal requirements, the internal integration that they've done is also going to aid their margins going forward. So we're still expecting a decent 36-37% earnings growth over the next 2 years for Maruti.
Right, Mayuresh, just stay on with us. We're taking a break, coming back into markets down, continue to be down about 40 odd points. 32 points down for the Nifty, 5-7 point recovery coming in, but I don't think it's worth noting anything. We were talking to Mayuresh, he's still with us. Mayuresh, we just spoke to Chanda Kochar from Davos, and she said that we are working for a good solution with most of the corporates that there have been issues with in terms of stressed assets. Do you think they will find solution for a lot of the corporates, because a lot of the corporates also do own some good assets?
Hope so, Pankaj, and clearly I think the stress that we're probably seeing on a lot of the bank balance sheets is because of the elongated working capital constraints that corporates are probably facing. To whom lending has already happened, whether that be from the real estate sector, metal sector, steel sector, gems and jewelry. So you can name any of these corporates within these sectors which are probably having working capital cycle issues. Clearly, having said that, probably if you look at how the asset quality is expected to pan out for a lot of these banks, our own expectations is that a lot of cleanup action that Axis Bank has initiated will be followed suit by a lot of the other banks as well. So I think this quarter and the next, you're probably going to see a lot of action happening on that front, whether that be the restructured book, the structural debt restructuring cell, the 525. So I think all these aspects need to be seen very, very carefully. But again, in my opinion, I think the softness in numbers would continue, and I think the important aspect would be to see how the public sector report the number on the asset quality front.
Right. How would you look at when you're saying public sector banks in terms of numbers? There could be likely more provisions than what we have seen so far. But do you think that these provisions, or once they provide, it will be good, so that we at least know what is the sort of capital needs of these banks, and maybe the finance minister in the budget can allocate properly in terms of capital for these large cap banking names?
So clearly it's a dual effect, Pankaj. One really is not sure on how much provisioning is required. So if take for instance, I think PNB, I think 10% of the restructured advances are as part of the overall total advances. So clearly I think if you're talking about how the asset quality is panning, I think it's going to be a big question mark on how these banks perform. Secondly, on the issue of capital adequacy, I think these banks do need capital to grow, and clearly that has been a constraint for them for the past few years. So clearly whether that's going to be equity dilutive, equity accretive, I think one really needs to see how the capital allocation is happening, to which banks it is occurring. So clearly I think we're going to have a very, very close watch on how public sector banks are reporting the numbers, and clearly valuations are extremely cheap at this point of time, but clearly I think numbers should do the talking, and we'll wait for numbers to come through.
Right. How would you look at Axis Bank and the commentary over there? You think commentary was quite positive from the bank? It should be taken positive for the sector itself?
So clearly, I think the markets have taken it positively, and yes, I think I still believe that the next quarter as well, there might be some more provisioning that the bank might do. But again, I think it's a good act, and clearly, I think what the banks are probably doing are steps in the right direction. So I think any recognition on any asset which is expected to be stressful, I think if you're recognizing that, you're probably having or weeding off the bad elements that are probably there in your balance sheet, and that probably presents a much cleaner picture of the road ahead. Clearly, I think the other incremental advantage that these banks will have is once credit growth starts picking up, and if RBI cuts interest rates more over the next few quarters. So clearly that's going to be a huge value addition, and the larger private sector banks, in my opinion, having a retail focus, I think that benefit the most with the kind of capital adequacy they've got, the branch network, and that definitely will aid operating leverage, which will have a huge impact in terms of how the return on assets and the return on equity pan out.
Right, Mayuresh, thank you so much for taking out time for us. Always a pleasure. talking to you. That was
Thank you
Mayuresh
so
Joshi of Angel Broking. 90 odd seconds remaining for close. Very, very volatile day of very, very volatile day today. We opened up 80 points.